Hello and thank you for tuning in to this week's MacDesk Floor Report. I'm Rebecca Darsh from the Market Access Center here at the NYSE, bringing you the latest market action from the trading floor here at 11 Wall Street. Today is January 24th and we are up 2.5 points in the S&P, which may be close to the temperature outside. That's around 65 Dow points. We're just a little off the intraday highs. Just before the European close, the S&P hit its high of 1502, bringing it above a reading of 1500 for the first time since 2007. This also sets the stage for the first 7-day rally in the S&P since 2006. Advancers are leading decliners by just over 3.5 to 1, and 9 out of 10 S&P sector subgroups are trading higher. This despite disappointing sales figures in Apple's earnings report last night. Let's take a look at the overnight action. Again, that slowing profit snapshot from Apple didn't help the mood off the Asia Pacific Open. Growth in Chinese manufacturing, as measured by a private survey of purchasing managers, however, came in at a 2-year high. Although early gains in the Shanghai Composite gave way to profit-taking later in the session. In Japan, trade deficit data for December came in a little worse than expected, although the Nikkei tacked on a gain of just over 1% as a weaker yen helped exporters. Europe closed broadly higher on a mix of data points. Manufacturing data out of France and Germany showed a miss for French PMI in both manufacturing and services, while Germany beat. But the Eurozone composite reading was better than expected for both segments. The UK's FTSE index was the outperformer, closing higher by 1% thanks to strength in mobile, telecom, and tech names. Here in the frigid US, we had that disappointing read from Apple to contend with, but market participants have focused on a rosier picture emerging on the data front. Weekly jobless claims came in at 330,000. That's a decline of 5,000 from last week's revised reading and solidly better than the 355,000 market consensus. At the top of the 10 a.m. hour, we had the Conference Board's index of leading economic indicators for December, which rose by 0.5%. That was a good number. Heading into the afternoon, equity volumes are in line with the norm, but option volumes are a little heavier, and we can see some buyers of option protection stepping into the market. That's got the volatility index higher by about 3.5% at just below a reading of 13. So let's take a look at what's in store for next week. We've got some major market catalysts ahead, both on the earnings and data dockets. On Monday, we've got money supply data due out from the ECB, January home price data from the UK, December retail sales and import prices from Germany, while in the US, we'll be looking at December durable and capital goods data, pending home sales, and January manufacturing activity from the Dallas Fed, as well as earnings from Caterpillar, Yahoo, and VMware. On Tuesday, data out of Japan will include an index of small business confidence for January, as well as December retail trade data. U.S. data watchers will parse the S&P Case-Shiller home price data for November, as well as January consumer confidence. And we've got a full slate of earnings: Ford, Amazon, EMC, Corning, Eli Lilly, Harley-Davidson, CIT Group, Pfizer, just to name a handful. Next Wednesday, we'll get December industrial and vehicle production data from Japan and January readings on industrial and consumer confidence out of the Eurozone, and some big releases here in the U.S. The ADP January employment change will kick things off in the pre-market, followed by the Q4 GDP reading. Bloomberg's survey of economists calls for an annualized reading of 1.2% against a prior read of 3.1. And we've got an FOMC rate decision that afternoon, although sadly there will be no press conference with the chairman. You'll have to wait for March to put your questions to Mr. Bernanke. Earnings are due out that day from Boeing, Facebook, ADT, Duke Realty, and Owens, Illinois. On Thursday, we'll close out the month of January with Japanese data on December housing starts, construction orders, and jobless figures, and a read on Germany's change in unemployment and CPI estimate for the Eurozone. U.S. challenger job cuts are also due out that day, but much of the market's attention will be on a heavy schedule of earnings. MasterCard, ConocoPhillips, Pulte Homes, Time Warner Cable, Aetna, Under Armour, UPS, and Chubb are all due out that day, and we'll end the week with a final read on January PMI for the Eurozone, as well as December unemployment data, some PMI manufacturing out of the UK, and earnings from Exxon and Merck, as well as a number of travel and leisure names. Las Vegas Sands, Royal Caribbean, and Wynn Resorts are all reporting. We'll be following all the market action as it happens on the MacDesk, so be sure to check your inbox for the midday for the latest. We'll see you next Thursday for the next MacDesk Floor Report.